Are you wiping the sweat off your forehead today?
Yeah, I'm doing more than that. I'm sitting here just trying to puzzle out what really happened. I mean, it took us by complete surprise, Eleni. No one expected this type of reaction. You know, yesterday markets, we had recovered about half of our losses, that we experienced over the last 2 weeks, and markets were beginning to respond to corporate results. Today it's something completely different. Today it's just a stampede out of stocks and just worries that governments and central bankers don't know what they're doing or can't see their way out of this mess.
Well, David, do you think that investors are just starting to become very complacent about the policies that have been taken, the measures that have been taken over the past while? We're looking at bad economic data, the Philly Fed index really disappointing the market today. We're looking at US 10-year Treasury yields going below that 2% level for the first time ever. Is this a sign of things to come, or do you think we're just hyping the negativity up too much?
It's a worry. I think what's happened is investors have really been hurt. They can't trust the market anymore. You know, the old adage of buying good quality companies and putting them away has not served them well. You know, they've been battered. So I think it's really investors just perplexed, just not knowing what to do with their money, running to any kind of safe haven. And I think, just as I mentioned when I came into this interview, I said that, governments are not giving us a feeling that things are going to get better. There's a lot of disagreements with central bankers. There's indecision or indecisiveness, certainly in Europe, over how to get out of that mess. And all of this is just weighing on confidence and pushing people out the market. So it's very, very difficult to gauge. On top of that, the 10-year Treasury yield going down to 2%, we've got gold up $30 at 18.20. I mean, that's crazy.
Okay, so David, you're talking about what to do next. What are your clients asking you to do? Are they getting worried? What kind of phone calls are you getting, and what are you telling them to do? Are you buying? Are you selling? Tell us about your move.
Well, I'm not, I continue to stick with my quality shares that are giving me good dividends. We're going back to levels. I don't know where this is going to find a bottom. I'd still rather have a good dividend payer that gives you, 4, 5, 6% than going into government stocks. Certainly in the US as well, internationally, you can find similar ones. So I haven't changed my mind, but I must say that, these markets can shatter your reputation.
Absolutely. Okay, so David, yes, and we know we've a lot of lessons learned because of the 2008 crisis. SAB down 5.25%, Bidvest down 5%. We know SAB, there's corporate news as well, but these are aggressive moves to the downside.
At SAB, because yesterday it moved up, which surprised me. Today, maybe it's a feeling that they might overpay for Foster's now, or alternatively, they're reviewing the situation over Foster. So it was quite a sharp reaction to the move. I think it might be fear of overpaying. Bidvest, of course, they've rejected that bid. The bid for their food services business, I think, citing there that they need financial strength and they still want critical mass. So I think that's pushed them down. But you've got banks like Investec down quite sharply, and I think there are fears building up in Europe over banks. So a lot of stocks like that under pressure.
David, would you say that there are a lot of opportunities at this point? You're talking about those dividend yield players. Is that what you're looking at right now? And what kind of opportunities are there in the market?
I must admit that I'm feeling a bit fragile and a little sensitive at the moment because we took advantage of that last week. Round about when we saw the bottom, we thought this is great, and piling in. And suddenly we're back where we are and beginning to question our judgment. Eleni, I think at the moment, and I really mean it, I think that stocks are at the cheapest. Corporate results are very good if you look at a company like Truworths today. But I think the best policy is just hold back a bit, just stand back a bit, let this, let the turbulence settle, because I'm fear if you get in, if you get in too early or you feel you're getting in a good prices, you're just going to get your head chopped off.
Okay, so David, do you think that the market could actually, we're above 29,000 points, do you think we could head to 25?
I wouldn't say that low. I reckon we'll probably test where we were last week, what was 28,500. Let's get there and see where we go. After that, I always look for opportunities when I see red on the screen, but I don't know how long my clients are going to stay with me.
I do hope for a very long time, Dave.